makers and market movers. This is The Pulse with Francine Lacqua.
Francine's off today, so you've got me. Welcome to The Pulse. I'm Guy Johnson, in for Fran. Let's talk about what is happening in the markets. I've already given you some of the numbers and the details. Treasury's steadying a little bit. We've seen a big sell-off, actually maybe not that big a sell-off, we'll come to that in a moment, this week over concerns around what is happening with the US debt story. US stocks on track for their worst week in more than a month after a period of relative calm in financial markets. Nataliia Lipikhina, head of EMEA equity strategy at JPMorgan Chase Private Bank, joining me around the table. Good morning.
Good morning.
How much has actually changed this week? We've seen a US bond market that has been firmly in focus, a concern around the debt story. The US Treasury, the long end 30 years, we've seen obviously something of a sell-off. Yields have been rising. But how much has actually, in your mind, actually changed this week? Because I look at the numbers and I'm slightly scratching my head thinking, not a lot.
Exactly, not a lot. And if you think about, this is really the continuation of the story that we had for the last year or so, right? And when you're seeing where the big moves are happening, they're actually on the long end of the curve. If you look into the equity markets, they're actually relatively stable, given the moves on the long end. And for us, this is really the story of earnings. Coming out of the earnings season, we actually had pretty good and solid earnings season. Not a lot of companies cutting guidance.
A lot of that was tech, though, wasn't it? Didn't that skew the number, as it always seems to, but didn't that skew the figure?
Potentially. But remember, everyone was very skeptical going into the earnings season about the tech. And the fact that a lot of companies actually confirmed their CapEx guidance in terms of the tech spend for this year, the market took it really well.
Do you think, therefore, we're setting the ground for actually equities to move up from here? We've been very range-bound for quite a while now, so I'd say that, a few weeks. Which way do we break out? Up or down? Are we going to break out up or down?
Well, we actually see high single-digit upside in the US market in the next year. So we think that the equity market is likely to make all-time highs again. And in Europe, we actually expect low double-digit returns. So overall, you will see that we remain very positive on the equity market from here, with the preference of DM, developed markets, over emerging markets. OK, we'll explore that latter point in just a moment. But let's explore the US versus Europe argument at the moment.
I'm hearing a lot of people being very excited about Europe. But then in the same breath, they also say, we've seen this before. And I'm still a little nervous. I like the European story. I like the diversification story. But I feel like I've seen this movie before. And I've been promised in the past that Europe is going to catch up and do better. And then it didn't.
So we like both regions. We like US, we like Europe. But I think what is different in Europe right now is the improving domestic story, which we actually haven't seen in the last 5 years. You see the two parts of that improving domestic story. One is 500 billion of fiscal spending in Germany. And if you think about it, 4 trillion economy, it's a big chunk of the economy, 12% of GDP. If you compare that to COVID stimulus in the United States back in 2021, very similar stimulus on a much larger economy, the impact is not as high. And then if you look into the European countries that are increasing their self-reliance in security, those two factors is not something that we have seen in the last 5 years. So therefore we think that, well, Europe has always been cheap. But now there is this potential to unlock that valuation potential, and also the earnings is probably going to be higher in 2026 and 2027.
Is it more logical for you? I'm just trying to think about the various kind of groups of investors we have. If you're a European investor, is it more logical to bring money home or invest more at home at the moment? And I ask that question because I've also got the dollar as part of my thinking too. If we get a weakening dollar, that just works against me if I'm looking to go into a US market that I think is probably going to underperform a little bit versus Europe, and then I've got the dollar to think about as well. So is there a home bias now coming in for European investors in particular?
So we just launched our mid-year outlook with the title Comfortably Uncomfortable, and one of the parts of that outlook is actually dollar diversification. And this is what we're seeing in our market as well, that a lot of people have very big overweights towards the US market. Overall, that's something, it's a story of the last 10 years or so, that, you know, the very good performance that the US market had over the last 10 years actually played a role in those big overweights. So if we're seeing a bit of a weakness in dollar going forward, there is a chance that those, you know, investments can move just a little bit to the European
But is that
market.
primarily about, is that European investors or is that US investors? Because the argument to get European investors is relatively straightforward. For US investors, dealing with that kind of home bias, that natural instinct, is much more difficult.
What we're seeing in the flow data right now is predominantly driven by European investors.
In terms, therefore, of where we go from here, as I think about a more diversified portfolio, how different does it look going forward? How different is it going to be versus what I've had over the last 15 years? And how long does it take me to get from A to B in terms of the diversification story that I'm doing? Is this something I need to do quickly, or is this something that I can edge into?
It's probably, the theme over the next couple of years. Because if you think about it, I don't think this is frankly just an equity story. Because if you think about equities and bonds, it's also the conversation of adding diversified assets to your portfolio. Where JPMorgan have been talking about gold, we've been talking about infrastructure, hedge funds. So something that adds a slightly different risk-return profile to your portfolio. And this is something that served us well this year, right? We're seeing, for example, gold moves, which is a completely different asset class compared to equities and bonds. So I think, in general, people are now rethinking their portfolio allocation either geographically within their equities or by asset class, but maybe switching from 60-40 to adding a bit of private investment.
Why DM over EM? Because people are I'm hearing a lot more conversations about EM now, particularly given that dollar story you just highlighted.
I would say that this is the only... We're actually positive on India. So this is one of the markets where we see good growth, mid-single-digit GDP, low double-digit earnings growth, benefits from supply chain diversification. So all a good story there. But we're just not very comfortable with China right now. We're not seeing...
So ex-China EM, you're much more comfortable?
Correct. I think the dollar story actually helps the emerging markets, but China is what keeps us not being that positive on the emerging markets overall, because just how big China is in the emerging market index.
Okay. So how much, if you don't have to benchmark to that, the emerging market story is still an okay one? If people are thinking about how their portfolios are going to work and diversification, EM should still be part of it.
Absolutely.
But have you got... So ex-China, you've got an overweight or a neutral?
It's a neutral position for us. And if we're thinking about, the investors thinking about international markets ex-US, we're talking about European markets, we're talking about Japanese markets, and we're talking about Indian markets. So those are areas of focus for us.
Great to see you. Thanks for stopping by on a Friday. Nice to see you. And Nataliia Lipikhina, head of EMEA Equity Strategy, joining us from JPMorgan Chase Private Bank. Let's turn our attention to what is happening with the political story, because obviously that's been one of the dominant themes of the week. President Trump's signature tax bill heading to the US Senate after a narrow win in the House of Representatives. The White House wants it passed quickly, but some Republicans are still pressing for changes. Our EMEA News Director, Ros Matheson, joins us now around the table. How much of a headwind are we going to see coming out of the Senate? How problematic is the Senate going to be? Because it kind of goes House, Senate, then back to the House. What are we going to see?
Well, that's right. If they touch a single word of this thing, it becomes even more complicated. As you say, and we know it had a very narrow path through the House. It's a really big bill, and that's half the challenge. You have so many things attached to it and so many components, so it's bound to cause a difficulty in the Senate, because you have GOP members, on the one hand, that they are concerned, some of them are concerned about pushing forward very quickly on the Medicaid part. They've got one eye on the fact that it's not that far from midterm elections, and what happens if you're looking, to be ostensibly cutting Medicaid access or food stamp access for certain parts of the US population. So they're worried about that. Some senators may push on that regard. Some are pushing for even bigger spending cuts as part of this bill. They're worried about the state of the deficit. So there's that aspect of it. And there are some who are worried about, frankly, a whole lot of other parts of it. So what you're going to have is a lot of horse trading that's going to go on in the Senate. The question is, we saw Donald Trump really personally put himself in the middle of this bill and basically saying, if you oppose it, he was really warning Republicans about going against him. And does he use that same tactic in the Senate? And how successful is it? Because they're on the clock. They're trying to get a vote by August. They've got the debt ceiling looming potentially around August, September. So they've got to get something forward. The question is, how significantly does this bill get changed, and do the core parts of it remain?
There's some talk of even breaking it up and putting it into its component parts. We'll see whether that turns out to be the case. Let's talk about Harvard. Big move against Harvard after a series of big moves against the university. Now there's the Trump administration banning effectively it enrolling foreign students. What does the university do as a result of this?
Well, they've actually got 72 hours. They put them on the clock and they said if you don't hand over essentially a whole lot of information on your international students, they want Harvard to give them video footage, internal records about some of their international students. If you don't do that, we will now proceed with this action. So the question is, what does Harvard do? Do they try and go the legal route in a quick injunction in the courts to try and stop this? Do they capitulate and hand this data over? And in doing so, if you do and you stave this off, what does that do for your future either way, right? If you're saying you're going to give the government lots of information on your students, do students then say, I'm no longer going to go to Harvard? And does that set a precedent? So they've got a difficult decision to make in the next day or two about how to proceed. They haven't said what they're going to do. You'd imagine they'll probably go to the courts, as they've already done over some of the funding cuts that they're dealing with the government, $2.6 billion in funding cuts. Do they opt for that? But then what's the knock-on effect, obviously, beyond this? Not just Harvard. There's the economy around Harvard because these students spend money. And then there's what does it mean for the education sector in the US as a whole?
Where does this fit into the larger Trump administration push, against kind of what is happening within the universities, but also the kind of the broader domestic agenda as well?
Well, that's the thing. You say if it starts with Harvard, where does it go? I mean, they've obviously warning universities like Columbia as well. And so does it spread out across other universities? But you can also see the actions the Trump administration is taking against institutions writ large in the US. So the legal sector, for example. So does this sort of go across a bunch of institutions in the US, this agenda, and what does it then mean for society in the US? Not just the economy, but society, for free speech and so on. And so you can see the Trump administration really starting to remake these institutions to what they're wanting them to be and pushing them quite heavily. So again, it's the courts, it's the legal system, and it's universities and it's law firms. And so you kind of add that up and you wonder, where is it going?
Yeah, we've certainly seen plenty of history dominated by these kinds of overlaps between the political system, the university system, the legal system. Ros, great stuff. Thank you very much indeed. Bloomberg's EMEA News Director, Rosalind Matheson. Coming up, what are we going to be talking about? Bitcoin hovering at near record highs while Ether outperforms on hopes of more clarity on regulation in the United States. We're going to delve into the crypto story next. This is Bloomberg. Minutes past the hour. Welcome back. Bitcoin has slipped a little after surpassing the 111,000 level for the first time. The new high came on the same day that President Trump hosted a dinner for top holders of his own meme coin. Joining us now is Bloomberg's crypto blogger, Emily Nicole. Thank you for joining us.
Thanks.
This week's been a bit weird in many ways for the crypto market. It's felt correlated. Now it doesn't. Like in some ways, that's how it should be. But this does feel like we've seen a bit of a shift this week.
Yeah, I mean, if you think back to how Bitcoin was behaving during all the tariff chaos, it was trading very similar to what we'd see in equities. We kind of thought the narrative that Bitcoin can be a digital version of a safe haven had gone away. That has now come back in full force. We're seeing equities behave quite poorly this morning, whereas Bitcoin is up. It has slipped a little bit, as you said, back from that record high, but it's definitely still trading higher, as are other cryptocurrencies as well. So
in terms of where we go next, like I'm beginning to hear some really big numbers. So, really big numbers. But what are you hearing? Where is the optimism right now? What is the expectation? I mean, we were just saying, actually, between us over on the news desk this morning that, the next thing that we're looking for are those big level numbers, and there's no reason why Bitcoin couldn't get there. We're starting to think of it more as that maturing asset class, that cryptocurrencies are moving towards that, especially as regulations come into fore. That's been the big driver this week, the stablecoin legislation kind of progressing in the Senate. Trump continuing to be very favourable on crypto as well, is making a lot of institutional investors very confident in the asset class. So all of that is kind of building towards Bitcoin rallying further. The ETFs as well in the US tied to Bitcoin have done very well. And so as we see assets return to those kind of funds, that means that traditional players are moving into it. Retail may also be. And so all of that kind of portrays a rosier picture than you might get elsewhere. We're focused on Bitcoin, but there's obviously other coins out there. And there's also this story floating around now that we could see banks issuing a kind of joint coin too. What are the next developments that we need to be watching out for?
Stablecoins are definitely very interesting. I mean, that's the story that you're referring to there. With the legislation potentially going to be in place in the US by August, that then gives way to regulation being on the table within the next 12 to 18 months. And that would be very positive for that industry. You know, other banks and big firms also looking to enter the space. We have legislation for stablecoins in places like Europe already. So it allows also that global harmony. And if you have dollar-pegged assets like that acting as a gateway into crypto assets like Bitcoin, that all helps with getting traditional money, you know, big money into the space that wasn't there before.
Thanks for updating us. Appreciate it. Emily Nicole joining us on what is happening in crypto. Let's stay with the technology theme, come at it from a different angle. Bloomberg has learned that OpenAI is looking at the Asia-Pacific region for future data center sites, joining a heated race to build out AI infrastructure. It follows the news that the ChatGPT maker has secured a deal for a massive data center project in Abu Dhabi.
I do think what is going on here is that the world understands that we are in a moment, that there is an imperative to getting access to this technology. The U.S. does have the innovation lead right now, and can the U.S. leverage this lead to bring our version of AI, a democratic version, to the rest of the world, and as part of that process, bring investments back to the U.S. as well?
Tom McKenzie is here to talk about this. This is fascinating. This is about setting standards. This is about getting out there and putting your imprint on the Middle East and what is happening in Asia. Is that the correct read of what is happening here? This is a land grab, maybe the wrong way of thinking about it, a standards grab.
Standard setting is part of the rationale for this deal and why it has the blessing of the Trump administration. It is also, and also underscores just the relentless ambition of OpenAI, the relentless ambition of the UAE, and the fact that, frankly, the hand-wringing about data center build-outs was probably slightly overdone. You're talking potentially, this is what they committed to, 5 gigawatts. We're going to get there at some point. They're going to start with 1 gigawatt, 200 megawatts are going to come online next year. 5 gigawatts will need 5 nuclear power plants, equivalent energy to power that. It's not clear where that comes from. The ambitions of the UAE, the ambitions of the US, and the ambitions of OpenAI to make sure that their hardware is leading in terms of how it's built into some of these allies of the United States and the software components as well. It isn't just OpenAI, it's NVIDIA who are partnering with this, Cisco, Oracle and SoftBank as well. So it's all those players coming together to build out the infrastructure that clearly the UAE thinks it wants to have a front foot on. It's going to be giving subscriptions to its residents as part of this deal and embedding it in a number of different government departments as well. It's about trying to set the standard, trying to bake this in so that competitors don't come along, China, and start to take away some of the edge that the US clearly has.
Was that the risk that basically you would see Chinese companies coming in and effectively trying to do the same thing?
So David Sachs, who is the AI czar within the Trump administration, he says that is part of the rationale for this. He sees that development with Huawei. Huawei is the leading builder now of AI accelerators in China. They still have a long way to go. They still find it very difficult, if impossible, to get hold of those lithography machines, for example, from ASML in the Netherlands. There is still an innovation gap, but David Sachs is contending that that innovation gap is closing, and if the US doesn't get in there first, set the standards, bake in the infrastructure, then China, which has very close relations with the UAE and that region, will make sure that they are positioned and taking advantage of that. Obviously, there are questions about geopolitics. Obviously, there's concern that a partner like the UAE may be under pressure from Beijing. The offshoring of US technology, the most innovative US technology, to partner nations is a concern for some within the Trump administration. We know that. And G42, who they are partnering with, historically, not anymore, but historically had links
very strong,
to Huawei. So all of those are red flags for the China hawks within the administration. But so far, this is progressing, and now they're looking at the Asia-Pacific region as well.
This is a very big data center in a very risky part of the world. Is that something that we should be concerned about as well?
Quite possibly. You have Iran very close by. You have unresolved tension, of course, between Iran and Israel. You have the talks that are ongoing between Iran and the US, with Trump not ruling out, of course, a military attack at Israel, and reports that Israel could be looking potentially at a targeted strike on Iran's nuclear facilities. That uncertainty is all there. I think the pushback you probably get from OpenAI and their partners, this has proven to be, the UAE, a stable operating environment for a couple of decades now, and the expectation is, or at least the bet is, that will continue. But this is the biggest data center build-out outside of the US. In fact, it's the biggest one that will have ever come to fore. They do not have anything of this size or scale in the US. So this is huge. It's a massive commitment in terms of capex in a region that is volatile.
Yeah. There's a lot of power there, though, so maybe that's a factor in the thinking as well. Great stuff, Tom, as ever. Thank you very much indeed. Bloomberg's Tom McKenzie. Let's carry on the conversation around the AI space. The startup Anthropic is set to roll out 2 new versions of its Claude software, including a long-delayed update to its high-end Opus model. The firm's chief product officer, Mike Krieger, told us about some of the technical challenges around this release.
Our only, constraint for this launch was we want it to be available to, as many people as want it on the launch day itself as well. And so it'll be generally available. It'll be in Claude.ai for our more, end users. It'll also be available in the API for usage on day one. And then as people scale up their usage, there's often, capacity and rate limit conversations that we need to have just because the models aren't really in demand. But in terms of being generally available, it's day one.
Capacity and rate limit is a massive conversation right now. For me, a big piece of news in the last week was Grok 3 going to Azure Foundry. Is there any sort of technical or contractual reason why we don't see Opus 4 or Sonnet 4 be available in other places like that if the demand is there? For us, a lot of it has been around focus on the chipsets that we really optimize for. And so, we've been really spending a lot of time on Trainium 2, for example, with AWS Bedrock, and on TPUs as well on Google Cloud Vertex. Yeah. And so that focus on that team has been really on those 2 chipsets. Over time, I can imagine us expanding that in other places as well. I would wager that I'm one of the few journalists you speak to that spent time tearing apart a Trainium 2 server. A lot of fun can be had. But the next evolution of that is Project Rainier, right? So just for basic fact checking, Opus 4 was not trained with Project Rainier, but one would imagine on the inferencing side that is going to be a very critical piece of infrastructure. Absolutely. And the way we plan to meet the customer demand for Opus and Sonnet in the coming months, a lot of that hinges on that cluster, on being able to scale up our Trainium inference. And that team has been hard at work on making sure these models work well on Trainium on launch day.
That was Anthropic's Mike Krieger in conversation with Ludders, Bloomberg's Ed Ludlow. Fascinating conversation. Ed firmly embedded into that space. Let's stay with what is happening in the technology arena, though. Bloomberg has learned that Apple is looking to release smart glasses at the end of next year. Basically, this is a challenge, of course, to Meta's Ray-Bans. Sources say the glasses would have cameras, microphones, speakers, and that they would handle tasks such as phone calls, music playback, live translation, that kind of stuff. Apple has also, we understand, stopped working on a version of the Apple Watch which has a camera, but is looking at AirPods with cameras. We need to clarify the camera bit in the AirPod, which seems completely illogical. Apparently these are infrared cameras that are going to be basically measuring your body temperature, etc. So that's where that story is going. Up next, we're going to talk about what is happening in the European banking space. We need to talk about UniCredit. We'll do that next. This is Bloomberg. Morning, welcome back. You're watching The Pulse. I'm Guy Johnson in London. Let's talk about the top stories that you need to be focusing on this morning. The dollar retreating, Treasury stabilising, Donald Trump's tax bill advancing to the Senate despite concerns about the US deficits. The US administration banning Harvard from teaching international students in a significant escalation. It's warning that other universities could be next. Plus, G7 finance chiefs glossing over the impact of US tariffs, but warning that international trade will never be the same again. Let's talk about what is happening in the banking sector. There's a couple of stories floating around this morning that I think are worth our attention. The European Union has decided to delay the application of tougher capital requirements for banks, trading businesses. It's a one-year delay. We largely saw this one coming, and the reason we largely saw it coming is because the US can't make up its mind what it wants to do, and the Europeans definitely don't want to be first. Let's get the details now with Bloomberg's Tom Metcalf. Tom, is it as simple as that? Is this as straightforward as that? We need to wait for the Americans to make up their mind what they're going to do on the Basel rules, and then we can all largely fall in line.
Yeah, exactly. Basically, no one wants to go first, put their own banks at a disadvantage.
Yeah.
The fear is the EU implements these stricter rules, US, actually softens them, eases them, and then there's a sense, how could a Deutsche Bank compete with, say, a JPMorgan
What are we talking about here? Just give us the specifics of why you would underperform if
So it's all about, the capital requirements, right?
Yeah.
So effectively the rules are saying if you're doing certain trading, we want a bit more capital to sort of ensure if there's losses, the banks can absorb them.
Yep.
And the interesting thing here is just how material would this be. But I think you had the Deutsche Bank CFO indicating something like 7.5 billion euros of risk-weighted assets would sort of come under this thing. So be relatively significant. But as you say, people were expecting this delay, which is the second time they've delayed it, just because, as you say, people are waiting to see what Washington does.
Yep.
UK is doing something similar. So I think we're probably in wait-and-see mode, well, at least now until 27.
The Swiss have
Well, yes, the Swiss seem to be striking very strict regulatory pros, at least with UBS.
Yep.
They're in a fascinating situation with a bank that's so much bigger than their economy. But again, that is all, a multi-year process, and I don't think, that was the first round that UBS lost a few days ago.
Yep.
I suspect there's going to be a long, drawn-out discussion, shall we say.
Discussion. Let's talk about UniCredit, talking of discussions.
Yeah.
Maybe slightly less friendly discussions taking place. Basically, you've got UniCredit escalating the Banco BPM fight. It's taking Italy to court. Why?
Yeah, exactly. I think UniCredit coming out swinging. Effectively, Rome has come out and imposed certain conditions which, in UniCredit's view, effectively make the deal, untenable or certainly much more unattractive. And so what currently happens, you've got a 30-day delay, and UniCredit are using that to effectively try and push back against those conditions. Again, more discussions, more debates, probably more fiery conversations.
Yep.
It just shows, there's so much bank M&A flowing around, but what hasn't changed is governments love to get involved.
Yep.
And are very sensitive around banking deals.
Banks, it's amazing, isn't it, just how sensitive they are. Is there you talk to a lot of people about this. Is there a way through? Is there a deal to be done still here?
Well, yeah, Olchel's the master deal maker, so I think he thinks there is. I mean, but there's so many moving parts, right? BPM, the sort of target, is very anti the deal as well. And it's one of those situations that's, where you really earn your keep. Can you kind of find something that keeps Rome happy, that obviously shareholders buy into, and actually add value? And history has shown that's very, very difficult to do, but Olchel's not given up yet.
No. I suspect he's not. Tom, nice to see you. Thank you very much indeed for bringing us the story. Tom Metcalf joining us on the banking story. Let's talk about what's happening on the trade story. G7 finance ministers have pledged to address, quote, excessive imbalances in the global economy. This following 3 days of talks in Canada. The group's final communique stressed the importance of a level playing field.
When you're talking about growth policies and the spillover that this overcapacity can have to our economy and how we're going to react, this is really a step forward. And, when I say where you find common grounds, people have talked about tariffs, but definitely there will always be tension around tariffs, but there's also places where you find common ground.
Brendan Murray leads our global trade coverage and joins me around the table. My read, they glossed over the kind of the tension that exists between G7 economies at the moment on trade. Did we learn anything useful? Was there a sort of takeaway here, other than the fact that they almost don't want to talk about it because it's too sensitive?
Yeah, exactly. So this is the finance ministers and the central bankers, and so it sounds like they've just kind of delegated the nitty-gritty trade conversations to the trade ministers. So it seems like they came to a sense of, look, we've got a lot of other things going on in the world that we can focus on. Tariffs are disruptive, but let's set those aside and focus on Ukraine and the whole issue of overcapacity and imbalances. You could apply that to a lot of different things. You could apply it to the U.S. trade deficit, or you could apply it to Chinese overcapacity. So they tried to get to some place where they could smile before the cameras at the end of it all and say, look, we're united. We have some disagreements, but we found some common ground, as the Canadian official said.
Okay. Let's talk about that delegation. So we're going to have a call later on today between the Europeans and the US. The Europeans pushed a paper out the other day it felt like they were trying to push this story on a bit because the clock is ticking.
Yeah.
Give us a sort of sit rep on what is happening in these talks right now.
It feels like the U.S.-EU talks over trade are much further behind some other countries.
Yeah.
We had the U.K. arrangement a couple of weeks ago. Some Southeast Asian countries feel like that they're on track. But the situation between Brussels and Washington looks difficult to even get things on track. Before you do a deal, you got to figure out what you're going to talk about, and they're trading these papers back and forth.
So we haven't even got that. We're not even there yet.
Exactly. I mean, they're kind of doing this dance, and they're talking past each other in a lot of ways. And in order to negotiate a trade deal, you've got to have an outline of it.
Yeah.
You got to know what's on the table and what's off the table. And it sounds like there's more off the table right now than there is on.
Are the Europeans pushing for a deal, but the Americans are basically just kind of parking it? Because that seems to be my sense of things at the moment.
It seems that the tone from Washington is, and President Trump has said, the European Union treats us worse than China has.
Yeah.
So we're starting from a fairly low base of cordiality between the two trading partners, but it's a huge relationship. The EU is the biggest destination for American investment, and there's a lot at stake here. But the U.S. seems to want to go after not just put tariffs on European goods, but non-tariff barriers, the VAT tax, and there's all this stuff that's on the table. You look at the U.S. report on its grievances with the European Union. It's like 40 pages long. There's a lot of substantive issues that the U.S. wants to bring up that the European Union is saying, well, here's what we have to offer, and it's not meeting the standards that the U.S. wants for these discussions to progress.
Brendan, great stuff. Thank you very much indeed. We'll look for the update on that call a little bit later on. Brendan and the rest of the team will be bringing that to you. Okay. It's a Friday. I don't often get to talk about kind of things like this, but it's a Friday. So let's talk about flying cars. There's not much of a segue to be made there. Chinese EV maker XPeng says it's hoping to launch the world's first mass-produced flying car next year. The push by the Chinese auto companies into the flying car business comes as policies on low-altitude aerospace are increasingly loosened.
I think mobility should not be just limited to two-dimensional travel. So I think there is definitely a policy trend that's propelling the growth of a low-altitude economy, including the flying car. On the product side, we actually have our very first product that we call the Land Aircraft Carrier, which is a modular design with a car and flying drone together in one product. We actually hope to receive final approvals by the end of this year and hope to launch to retail consumers later next year. And that will be world's first volume-produced, flying car.
Right, good. The president of XPeng speaking exclusively to Bloomberg at the JPMorgan Global China Summit. What are we going to do next? We're going to go back to some of the stories we've just been talking about. Ukraine peace talks and another Oval Office ambush. We're going to look back at a week in politics. Elisabeth Braw from the Atlantic Council is going to be joining us very shortly. Looking forward to this conversation. This is Bloomberg.
Consumers are starting to pull back on their spending, and business owners are starting to push off capital expenditures.
We just think there's going to be a business cycle, and when that happens, the Fed's going to have to cut rates.
You have a substantial amount of uncertainty in almost every market.
The tariffs are not going to be as bad as we thought on Liberation Day, but they're still not going to be zero. And I think as we get more data that comes out, markets aren't priced for disappointment.
I think some people are probably not so much selling America as maybe not adding as much to America as they got in the habit of doing.
And so you're getting back to, okay, this is a storm, but we'll get through the storm.
People used to be very U.S. exceptionalists, U.S. And we have seen some shift from U.S. to other countries since the beginning of the year.
I think we should all be very careful. There is too much debt in the system.
We have seen a de-escalation, but we still know that some tariffs need to be negotiated, that we're in a period of pause.
Some of the great guests we've been talking to at the Qatar Economic Forum in Doha this week with their views on President Trump's trade war. Let's kind of carry on that conversation. The chair of the private equity group EQT has told us that Donald Trump's policies are making the Swedish firm more attractive to investors compared with rivals based in the United States. Connie Johnson has been speaking exclusively to Bloomberg's Kriti Gupta.
It has been rather favorable for us not being based in the US and being a US firm, because the ones we're competing with is almost exclusively the US firms right now. and they are having some headwinds out in the world for reasons caused by others than themselves. And the flip side of that is that people are looking more for managers that are not based in the US, and maybe to deploy money with GPs that is not US based or US dollar denominated. So it has benefited us, especially in Asia, but I would say also in Europe to some extent.
What do you say to global investors that are looking to invest in Europe, or saying, give me a reason, Connie, give me a reason that Europe will suddenly wake up and catch up to the rest of the world? Is there a reason to be optimistic here?
Well, Europe would never have been able to get organized without getting pressure from somewhere. And now we got pressure from the US, and now we are trying to get organized. So it's clearly so that the understanding of the necessity of change is there. Now we are waiting to see the actions. We see some signs, but there are so many things that needs to change to get Europe back to a position of competitiveness. And it's talked about, and everybody travels around, meets and discusses these kinds of things. But it has to be proven that we also can get into action and create the right regimes, regulations, allowance to consolidation. We need to have one common capital market. We need to have a handful of strong, big, successful European banks. Basically, we have maybe one today in Europe. And those things need to be put in place, and they need to be put in place by the politicians, unfortunately. And that's, of course, it's a bit scary, but we are hopeful that we'll get there. And we're helping them. We are participating in the dialogue around that.
Connie Johnson, the EQT chair, in conversation with Kriti yesterday, talking about kind of Europe needing to move faster, but still struggling with that conversation. The conversation has started, but action maybe a little bit less. Let's turn our attention back to the EV story, the car stakes. The EV revolution has turned a once quiet part of central China into the country's lithium mining capital. But Bloomberg has found that few operators there around the city of Yishun are making a profit. It's the subject of today's Big Take, and Bloomberg's Annie Lee joins us now from Singapore to discuss this. Annie, talk to us about why China is so keen to develop this as a domestic resource and how important it is.
Right. So for lithium in specific, it is a key material that are used in today's batteries. So while China is like the dominant force in the EV industry and even metal refinery, but like when it comes to lithium, it still imports a lot from like other countries like Australia or Chile. So it has always been a strategy for China to reduce overseas reliance and to increase domestic resources. So when the energy transition take off in this city of Yichun that we went to, we see that there are a lot of companies who are going to this city to invest, to dig up these resources called lepidolite, which is a low-grade ore of lithium. But because lithium prices at the time was very high, thanks to the EV cells, it is still a very attractive resources for China and the companies, and there were also a lot of government support and push to develop it.
In terms of why it's hard to make money here, talk us through that.
Right. So fast forward to now, this is no longer like a very boom time for the lithium prices because EV cells have slowed down in terms of the growth pace, and there is also an oversupply of the battery metal. As I mentioned, this is a very low grade of resources of lepidolite in China. The processing of it requires more steps, and therefore it is more costly to make to a specific grade that would be useful for batteries, and also the processing generates more waste, and treating the waste is also expensive. So we found that actually a lot of the production right now in this Yichun city is struggling to make profits unless you really have good links or the so-called integrated supply chain with battery makers or car makers.
And in terms of the environmental cost of all of this?
Right. A few years ago, when the market was booming, there have been local reports about high level of toxicity waste found in the rivers in the city. The river that people drink water and wash their clothes from. And because there was a flood of people going there into the city to mine the raw material, there were also cases of people dumping the waste at the back of the mountain. So after now, we see that there are actually more efforts coming from the local government to improve the situation with more environmental checks, and they are regularly sending teams to local factories to test the underground water to see how the waste treatment is being managed. And there are also companies there to improve their efforts to build a bigger area to store the waste, to treat them properly. But that in terms also means that actually is weighing on their cost. And this is a price that we are seeing that in Beijing's ambition to achieve self-sufficiency and also to boost their new energy sector, this is a price that the country is paying.
Annie, thanks for updating us. Great big take. Well worth the read on the Bloomberg. Annie Lee joining us out of Singapore. Honestly, check it out. It's great, the fantastic text in there. Let's talk about extending that story and talk about what's happened in the geopolitical scene this week. It has been a busy, busy week. We've had President Trump's two-hour phone call with Vladimir Putin on Monday, growing condemnation, of course, of Israel's renewed offensive in Gaza, and a second Oval Office ambush, this time with the South African President, Cyril Ramaphosa. Later today, Iran and the US are going to be resuming nuclear talks in Rome. Let's pull it all together, try and find some common threads. Elisabeth Braw, Senior Fellow at the Atlantic Council, joining us around the table. Was this the week that we finally got tacit admission by Washington that Putin does not want to end the war? And if so, where does that take us?
I don't know whether it was tacit or not so tacit,
okay.
but there was a recognition that, yes, Putin is not that interested in ending the war because until now we have seen him slow walk things, and he has promised or suggested to Trump that all he wants is peace. But then they did have that phone call. We should remember that Trump and Putin have both said, and Trump has said so several times, that what needs to happen for peace to be possible in Ukraine is for Putin and Trump to have a conversation. Where they did have the conversation and no peace materialized. And then we get the situation where now apparently the Pope has to solve this. So it was an admission that Putin is really not that interested.
So where do we go next? You've got this Lindsey Graham bill floating around in Washington, which potentially could push quite severe sanctions back into the limelight with regard to Russia. Does the White House basically step back, allow Congress effectively to do what America needs to do next, which is push further sanctions? The Europeans have been pushing for it. Is it going to be Congress rather than the White House, though, that ultimately ends up delivering those?
Well, we should remember Congress can't do sanctions alone. It has to be done in conjunction with the administration.
But who leads, I guess, is the point.
We may see more concerted efforts by Congress, but I think if there's one painful recognition that has set in Western capitals, it is that our sanctions are not what they used to be. We could sanction South Africa back in the day, Iran, similar countries, because 30, 40 years ago, we were the economic giants of the world. We could put economic pressure on countries. Now that we're doing it with Russia and have been doing for 2-3 years, we have realized that if we put sanctions on Russia, yes, that has an effect, but not very significant, because Russia will then switch trade to other countries that are now economically very powerful. China, India, similar countries that 30, 40 years ago could not have replaced us.
So the options now exist for Russia. You bring up South Africa, you bring up Iran, so let's talk about those. Why, as a world leader, would I want to sit down in the Oval Office right now?
Yes, why would you? Don't become a world leader. Although you're important enough, important enough here at Bloomberg. But so this is another really stunning development, staggering, shocking, whatever adjective you may want to use. Until now, world leaders have been fighting, have been using every connection they could think of to get a meeting with Trump at the White House, because they know that speaking to the president is the way to getting things done. You don't use the traditional channels. But now it turns out that even if you get that meeting, it may not work out in your favor, which is what Cyril Ramaphosa discovered this week.
I thought he handled it quite well.
He did. He did.
Is there any effect of that? Kind of, what does this mean for South Africa?
Well, what it means for South Africa is that he actually looked quite good. It looked like he was taken by surprise. He was ambushed, but he handled it quite well. And what he also did quite well, I thought, was, and I think the rest of the world thought, was to bring a couple of, let's say, sidekicks or junior partners who can participate in the conversation. In his case, the two golfers, who turned out to be quite effective advocates on behalf of South Africa. So any world leader who gets an invitation should think about bringing a couple of team mates.
Yeah, golfers. The president obviously has an interest in that area. Let's talk about these Iran talks. This has been a week in which we've heard potentially Israel planning an attack. We've got talks taking place today. Which route is your current read that we're going to take? Is it going to be the military route, or can the nuclear story be resolved diplomatically? Because I'm still trying to understand what Tehran wants out of this as well, and where its stance and red lines are.
Well, it's an extraordinary development, is it not, that these talks are even being mentioned, let alone being close to coming to fruition, because one of President Trump's major complaints in his first administration was the Iran nuclear deal, which he said was the worst deal in the history of the United States, things of that kind. And one of the first things he did as president was to leave that deal, which we should remember had been painstakingly negotiated over several years by negotiators from a number of countries, including the European Union. So it was a major diplomatic effort that had resulted in the Iran nuclear deal, and then America left it. So it is surprising that there should be this effort by the United States now to get to a new deal. But I think it has to do with the fact that it is clear that we need some sort of nuclear deal, and most of the world would say the previous nuclear deal was good enough. But what Trump seems to want is his nuclear deal.
Is the Iran threat, so is the Israel threat being used to push the talks? I.e., there's that option over there, or we can take this option. We can talk, because that option is not an option that anybody really wants to take. Is it by design that both are on the table in the same week almost?
In a way, but we should remember that Trump is not a man of ideologies, so he will seize whatever opportunity he has. And so that makes it so hard to predict where he will go, with what country he will speak. And this has come as a surprise to Israel, for example, which had assumed that Trump would be an ironclad supporter of Israel, and now he went to the Middle East to have talks with other countries. And that's why it makes the Iran talks so unpredictable.
Great to see you. Thanks for coming to see us. Elisabeth Braw, Senior Fellow at the Atlantic Council. Thank you very much indeed. The US Treasury Secretary Scott Bessent will be speaking to Bloomberg a little bit later. This is Bloomberg.